welcome to Street Check, the best podcast in the history of Cabot Wealth Network, which has been in business since 1970, delivering investment research, insights, and ideas and stock picks. I'm Chris Preston, editor-in-chief and chief analyst of Cabot Stock of the Week.
And I'm Brad Simmerman, the web editor, chief analyst of Cabot Wealth Daily. We are going to forego our normal format today. We have two exciting guests, Mike Cintolo, chief analyst, Cabot Growth Investor and top 10 trader, and Jacob Mintz, chief analyst, Cabot, Options Trader Pro, Profit Booster, and so on and so on. Welcome, gentlemen.
Thank you very much.
Let's just say guests. You didn't have to throw the exciting in there. So we figured this is a good time to have you both on. I think we had you both on. It might have been in July, near the top, possibly, when we were all pretty bullish. So figured a good time now. It's been a good 3 weeks for the market, which is something we haven't been able to say since the summer. Market's up in each of the last 3 weeks. Mike, I know that some of the market timing indicators you've been following have flipped to bullish lately, but you're still, like you said, it's not 1999 out there. What are you looking for it to flip to have you sort of more encouraged or jumping in with both feet?
Yeah, just more. That's all. So I'm optimistic because of the big picture setup we'd written about, and it's been two and a half years for growth stocks. February 2021 was kind of the glamour top. So you can never quite tell if you're in like the bottom of the ninth inning or the top of the eighth, but it's not early, in terms of that whole cycle. So, I'm optimistic, and I think the 3 weeks have gone about as well as you could hope. It's not like 3 weeks ago I was saying, geez, if we don't have 500 stocks hitting new highs in 3 weeks, this is just a mess, So It's gone about as well as you can hope. Now it's just a matter of, more leadership. I don't trade, breadth, so to speak, but, I don't think the rally is going to go forever if, the breadth doesn't pick up, and it has been. So I think you just need to see more breakouts, more upside, more of these, we see a lot of gap. Me and Jacob have been talking about all sorts of gaps, whether they're off the bottom or into new highs, and they don't pull back. And then they've been marching higher, obviously, recently. So I wish I had a great, awesome podcast clip that said, this is the number one indicator, but honestly, I just need to see more breakouts, more strength, and just go from here. And I think it's going to be one of those situations where you look back, hopefully, in 4 or 5, 6 weeks and say, wow, I'm fully invested or on margin or whatever, because everything's working, but it wasn't like one sort of green light. It was just kind of a accumulation of things.
Yeah, I mentioned on our podcast last week that I was looking at the 200-day line on the equal weight index, which it's been flirting with. It's not quite there. Maybe it's gotten there as we're recording this, because that every time it's broken above that, it's usually like a couple of weeks after the market sort of bottomed, and then it's gone up for another month or so. I mean, the ups this year haven't been huge. The last 2 times it happened were in January, where it pulled right back in February, and then June and July, and then of course the last 3 months happened. Obviously the equal weight tells a different story. Do you look at that at all, or is that sort of off your radar?
I keep an eye on it, but I think it's just more, yes, I do look at it. So RSP is what you're talking about for S&P, but small caps, mid caps, whatever you're looking at, they kind of look the same. And so I don't need to see them lead. Like financial stocks, it's like I don't need to see them lead. I just don't want to see them like completely suck. You know what I mean? Because it's just like, well, kind of could infect things. I mean, maybe not right away, but that sort of thing. So the good news is we're starting to see it. You just got to see more and more. So yeah, whether it's small caps, mid caps, RSP, it's kind of the same message.
Right. And Jacob, in the options world, did you notice like a sharp turn 3 weeks ago or during the last 3 weeks where bullish activity picked up? And what is it looking like? Has it been sort of steady the last week or so, or which way is it going right now?
So I'll say that there were a couple indications that the market was about to turn, and Mike and I kind of disagree on one of these, which we disagree on a lot of things, but one of them is, So about 3 weeks ago, or whenever the market was really falling apart, the VIX was up. It was trading at like 20, 21, 22, but it was not exploding, right? So the regional banks were falling apart. Tech was a mess. Everything looked terrible, and it looked bad, but the VIX just would not explode higher. So that was a sign to me that, the big market players weren't really concerned about a steep market decline. Mike was, we're just shooting the stuff of sorts. And he was like, this VIX has got to really explode for the market to turn. And I kept saying, pushing back. I'm like, he could be right. He 100% could be right. There are times where you want the VIX to really ramp higher to show, a capitulation of sorts. But in this case, it was not going higher, which led me to believe that the indexes weren't going to really fall apart. So there was that sign. Also, option activity about 2.5 weeks ago. So just, not at the bottom, but shortly after we started to show some signs of life, option activity 1 or 2 days just went berserk bullish. So there was signs that, the big players were buying Amazon calls, Nvidia calls, at the money, out of the money, all different types of expiration cycles. So that was a sign that the big market players were, looking to gain exposure to the market again. And, we bought a couple positions. I didn't go all in by any stretch of the imagination. The market just didn't, it wasn't a high conviction. Those weren't high conviction buys, but there just were signs that with the VIX coming down and with option activity ramping up, that, we could, start to dip our toes in of sorts. So, and to be honest, it's continued. It's not been like,
okay, that was my
there was
question.
that turn right before the inflation story kind of turned. There was a ramp of call buying activity. It's been steady since. I mean, it's been, if my option barometer is, a 1 is the most bearish, all types of put buying activity, to a 10 being extremely bullish, it's been at a 6 or 7 pretty much every day for the last couple of weeks. So that's a pretty bullish sign. Every single day they're buying Amazon calls, Nvidia calls, Square calls. They're buying the big players, but they're also getting involved with these off the bottom names that Mike was talking about. Square, Zoom, those type of Datadog, those type of plays. So that's encouraging to me.
Now, you mentioned a couple of the tech companies. Have you seen any specific sectors that seem to be picking up faster than others?
So that's a good question, Brad. It's pretty widespread. So that's actually as bullish of a sign as you can see. I will say, we got. So I run the Jacobs Private Circle, the JPC service, which is just a small group of traders, and we're involved in an ARK-related play because there's been a lot of call buying in Square, PayPal, Zoom, Snowflake. It's just like the hyper growth stuff that's been awful, just awful for 2-3 years, and now they're starting to get involved with the off the bottom stuff. And that's I generally try not to pick bottoms, but when it's that kind of steady activity, plus all those stocks have gapped up on earnings, it's definitely an encouraging situation for that group, and we got involved with the position.
Mike, are there any sectors that have caught your eye in the last 3 weeks?
Well, from a growth perspective, it's been mostly tech software, some other stuff like Uber and all that sort of thing. But that's one thing I'd like to see, I guess, from just growth is, so retail, like Wingstop's kind of picked up, and there's some of these like almost like cost cutting, kind of like pandemic supply chain things. So American Eagle and Abercrombie's been great. So they've been in top 10. But in terms of like real growth, there's not a lot of retail, and medical was just awful. I mean, biotech and like the medical device stocks got destroyed. So there's like slim pickings there. So right now it's mainly tech and all that stuff, hopefully, and AI and chips. Hopefully it broadens out. It's one reason like Duolingo, it's kind of like a non-tech, it's kind of a unique growth story as opposed to just AI or whatever. But right now that's kind of what we're dealing with, at least on the growth side of the equation. But hopefully it broadens out.
And I think you mentioned in a recent issue that it's not there yet, but you were somewhat intrigued by the action of home builder stocks or housing related stocks. What have you seen there, and what do you want to see to be sort of really interested in it?
Yeah, well, I don't know. I'm pretty interested. So, the group is it's one of those non-growth groups, kind of like aerospace, that can trend. So, like when things are right, it can just trend for months and months and months. We actually saw that earlier this year, even though rates weren't cooperating. I don't know. You've just seen a lot of, I called it elephant tracks, but whatever, just getting massive gaps, no pullback, another gap, no, very tight, big, another gap, just big volume, new highs. So like, is Pulte Homes or Toll Brothers going to go triple? Probably not, but I do think that it's been kind of the ultimate contrary play, right? It's like someone said 2 years ago, mortgage rates going to go whatever way up, and you'd say, oh, home builders are toast. But it's kind of been the opposite. As we know, prices are still up and all that. And maybe with rates coming down now, they start building more and more and selling more and more. So I'm intrigued. It's not going to be the core of my portfolio, but I think the group can do well.
Yeah, I think there's definite. Oh, sorry, Jacob, go ahead.
I was going to say, Mike said, these stocks aren't going to necessarily double or triple. It's funny. I was just yesterday, one of our positions that we've been holding for a while is Intel for Cabot Options Trader. And Intel is not sexy, right? I mean, it's been terrible for years, but it's up 70% this year. It's just like there are these times where these beaten down names turn. They're hated, and they turn and they go higher than you could ever really imagine. So and call buying in Intel is absolutely been bananas the last couple of days. I mean, yesterday it traded 700% higher than its average daily volume. It's just it's when the institutions and hedge funds and the options crazies go find these stocks, they could really push these things higher. So I know that Mike and I talk a lot about stocks that are fallen leaders that kind of reemerge, and so I think there are some of those situations. Intel up 70%, could Square and those PayPal, those fallen names start to really turn. Biotech has been horrible. So these things can surprise you to the upside when they finally get out of the gutter.
Yep. And I would just say, let me just jump in. Is like, I was thinking about this earlier today. I mean, me and Jacob are like anti-macro, but there's just been so much of the broad market has probably discounted, I don't know, a recession, but something not good, right? So, I mean, I think the IWM as of 3 weeks ago was no higher than middle of 2018. You just have a lot. The biotechs haven't gone anywhere for who the hell knows how long at this point. So I do think there's some of these travel stocks, the numbers have been good the whole time. They've been sucking wind, and then like Expedia or TripAdvisor, all of a sudden they're going bananas. So I do think that there's a lot of the broad market that's everyone was leaning in one way for so long that when things go right, they can really go right.
So with Intel, you mentioned specifically, is there maybe a case to be made that it's sort of a toe in the water, right? Like branch out from the Magnificent Seven, sort of have some adjacent sector exposure, and it's like Intel's if Nvidia is running too hot for your taste, Intel is at least adjacent, playing in the same space, and maybe hasn't had that same type of run up. Is there maybe?
Yeah, I mean, I guess you can certainly make the case for that. I will say I am writing about it in a weekly article. I saw something that I'm going to just quote it here. Going into 2023, Intel had 11 sell recommendations on it, which was the most of any NASDAQ 100 member heading into the year by double. So yes, it could be you can make up whatever story you want. It could be just people don't have exposure and the story's turned and it's time to get back into like a safe tech type play.
Is there any whiff of meme stock to
Intel? So I actually tweeted yesterday, kind of tongue in cheek. I said the call option activity in Intel was so strong it feels like it's GameStop and AMC all over again.
Right.
But I tongue in cheek, right? Oftentimes refer to these options players who buy weekly calls out of the money every single week, chasing stocks. I call them options crackheads, just because they're just willing to just keep firing away and missing, and they just can't stop buying. So it's possible. I also have a position in Palantir, symbol PLTR. Well, that's a heavily shorted name, and the call option activity is bananas. So it's just that feels more like a GameStop AMC type of situation, but Palantir is certainly a much better company than those type of stocks. That's another one that gapped up on earnings and has not given up an inch. So it's intriguing.
Yeah. So Mike, you mentioned, and we knew this going in, so I've tried to keep it to a minimum. You guys are not don't like to talk macro, and we talk enough macro on this podcast as it is to Jacob's chagrin. But Mike, what do you think prompted this run up? Is it all about just bond yields dropping, Fed being less hawkish, or do you think it's something deeper than that?
No, I think it's the bonds. I mean, they've been the tail wagging the dog for 2 years, and
Yep.
and Fed. I mean, it's perception of Fed policy and rates and all this stuff, but I do think that was. I know, I know there's a million moving parts, but I've been around where it's kind of like everyone's waiting for like Iraq War 2.0, and then all of a sudden, like, this can't happen again. This is exactly what happened in 91. Is the market really going to do the same thing? And then sure enough, it did the same thing, So I think that's really mostly it, but it doesn't really matter why. Maybe it's seasonality, maybe it's options crackheads. I don't know, but I do think, I think the setup was there though. I do, with the, not just oversold, but just sentiment. You had just the whole thing, it just smelled in that direction. And you're right. I was busting Jacobs, about the VIX during that time. I was like, oh my God, but he was right. And so far it's been obviously a good thing. So, but I think if rates start to ramp up again, probably not going to be bullish for stocks, So I do think it's that's probably the tail that's still wagging the dog a little bit.
And one more thing about, why we turn, why it's been so vicious. I don't have the data in front of me, but Goldman Sachs came out with a note last week or 2 weeks ago that said that hedge funds had shorted, or most short indexes and stocks for like 2 straight weeks, and they've been since whatever the last crisis was. So, when this turns and you're short, especially heading into year end, it really creates rocket fuel to the upside. So there definitely is that component. And if the higher we go, it's just the chase is going to be on if we continue to move higher.
Right. I totally agree. And just not to go, but like the Bank of America survey, it's every month. It's a survey plus like how people are actually positioned in terms of institutions. And it's like, it's been going on 25 years, and the measure's been rising for like 6 months, and it's up to like the lows of the pandemic. I mean, people are just very positioned, they're positioned very defensively and short and all this stuff. So if things continue to go decently in the world and not completely implode, I'm optimistic the market can do pretty well.
Now, one thing, Jacob, that I wanted to ask you about, just because I don't think I've seen it covered in the past, is there a seasonal effect in the options market specifically? I mean, we talk about Santa rallies, seasonality in equity markets. Does that carry through in any way to options that we might not be aware of? I'm certainly not aware of any, and I just wanted to take advantage of the opportunity.
Yeah, no, I don't think there's necessarily the studies that, the traditional Santa Claus rally type stuff. I will say, typically expiration weeks, we're in the tail end of this expiration week, those tend to be bullish, maybe, I don't know, 65% of the time, but that's really the only seasonality of sorts. And that doesn't really play into like a Santa Claus rally. So what essentially, when on these expiration weeks, if the market starts to move higher, it almost becomes like a self-fulfilling prophecy. It just goes higher and higher and higher typically. So that's really the only study I'm aware of in terms of that stuff.
Yeah, I mean, it almost felt like, with the October bottom last year, almost felt like, oh, well, we're owed that, we're due for another October bottom, but that's just a feeling. It seems like the sentiment had become so negative that, I know, Mike, that's one thing that you like to see, is when sentiment's that negative, it tends to precede, a run up like this. And Brad, I think you mentioned how much is on the sidelines still? How much money is on the sidelines still?
So it's still in the neighborhood of 6 trillion. The last numbers from the St. Louis Fed were from Q2, so we don't have a full update, but the Office of Financial Research is showing a minor downtick in money market fund balances from September to October, and that seems to be for the first time since 2022, specifically from October to November of 2022. There was a decline in investments in U.S. money market funds. So that cash on the sideline is still there, and maybe actually heading in the right direction now as far as equity investors might be concerned.
Does that 6 trillion include Jacob's hoard that he hasn't kept?
No, he keeps his outside the U.S. where it's not subject to clawbacks and legal jurisdiction.
That doesn't include yen-denominated Mintz coins or whatever.
Hey, I'm pretty darn invested, so I will say, I mean, so I have been. My portfolios are pretty bullish right now, and they have been. I will say I'm bullish but I'm also sticking to my systems, right? So I'm taking partial profits into this rally. My general system is I sell a third at 20 to 30%, another third at it's like 60 to 80% profits, and then I will just let the rest run. So, I'm bullish, but I'm also sticking to the system just in case we have just another rug pull. There's how many times this year we ran, everybody gets bullish again, and then it just falls apart. So, I'm bullish, but I'm certainly trading like the potential is there. There's a 25-30% chance we could just fall apart just again.
Yeah, I think we're all a little snake bitten after the last 2 years, especially after what happened after the summer run up to just, like I said, when you guys were on here end of July, we're all like bullish, it looks great. And while I think we expected some sort of pullback, maybe not a 3-month one or as deep as it was, but, Mike, I mentioned that you're saying it's not 1999 out there. What does this, looking back at sort of market history, which I know you're good at, what does this sort of feel like or resemble to you in terms of what the market, the type of market we're in?
Well, so it's a good question. So 2 thoughts. I mean, right now it's only 3 weeks, but yes, I'm sort of encouraged that it's kind of a lockout rally, meaning like, oh, I'll buy such and such on a dip, and then 2 days later it's up another 4%. You're like, well, okay, now I'm going to wait for it, and then it doesn't pull back. So short term, I'm maybe hoping, I'm definitely hoping, but I'm also wondering if, again, there's just so many people leaning in this direction that we're in that lockout rally. In terms of the bigger picture, it's a little bit like, I don't trade on this, but it's kind of like the 87, kind of 88 into 89. So 87 was kind of the meltdown crash. Not that we had a crash, but just kind of a bear market.
Right.
And then 88 was kind of this grinding, like, I think at the end of the year, it's like, oh, the market was up whatever percent, but like living through that and really net compared to like the prior, where the top was 2 years ago, it was kind of like, yeah, but nobody feels good about things. And then actually things did kind of kick into gear late in 88. And actually the Fed kept hiking rates in 88, even after the crash, because they realized the economy didn't fall apart. But anyway, they started cutting in 89 and the market had a pretty good, 12-month run or something like that in 89. So it kind of reminds me of that. A lot of the old leaders, old names are working again. That was kind of the same back then. So we'll see, but it's on my mind. I wouldn't say I'm keying off it to a huge degree right now, but that's what I'm thinking.
Now, one thing that Chris and I have talked about a couple of times is looking at China specifically, had outflows for the first time, net investment outflows last year. Do you guys have any particular feelings on investing in China right now?
Well, I am no China expert, but I can tell you that between the various services, I own 3 positions, bullish positions in them. So,
and you've had at least one of them for a while now, right?
I've held,
maybe all 3.
I can just tell you the names that I like from that space. I mean, there's actually names that look good. The KWEB, which is the China internet, basically, ETF, we'll just call it. It doesn't look great. It looks okay, but Pinduoduo, I can't pronounce it. Pinduoduo, PDD. That stock is basically trading at a new 52-week high. Li Auto, LI, is basically within $2 of a all-time high. Baidu, I think, is looking good. So it's not like necessarily the Alibabas. That stock looks terrible. JD looks terrible, but there are some emerging China-related names that look pretty good. And if, God forbid, if that index, that group gets going, I mean, I think PDD, Li, LI, and I think Baidu, I'd have to check. I think has been performing pretty well also. So there are some names. There are definitely, some emerging China names to keep an eye on.
Yeah, when we had Larry Chung on here 3 weeks ago, he was a Chinese investing expert. Pinduoduo was at the top of his list, PDD, and that was before, this big run. So, that's a name that has been sort of on our radar. Sorry, Brad, did you have something?
I was going to bring up the same point. He was highlighting Temu as the PDD marketplace, which offers maybe more of a discount exposure than what Alibaba's got. Plus, Alibaba backtracked on news that they were going to spin out some of their underlying companies as well, and they sold off, I think, close to 10% yesterday on the news. So it certainly makes a case for selectivity.
Yeah, I just look. Baidu's terrible. I was wrong, but PDD and Lee look great.
Yeah,
EDU looks pretty good too. There's a few out there that look good.
Yeah, and I've been high on BYD just because of their fundamentals, because the numbers, outpacing Tesla. Now the stock's been sort of stubborn. It not bad, but just sort of very marginal gains. I don't know what's going on there, but I still long term like that one. So just to sort of wrap things up, I know you guys don't like looking into your crystal balls. You don't like looking forward or making predictions. I mean, Jacob, you said, 25-30% chance maybe that this falls apart again. I mean, does this feel to you any different from, say, July or the beginning of the year or other points throughout this year?
Oh God! So I'm gonna get myself in trouble by predicting the future. The options guy is looking about an hour ahead, so I will say the VIX is trading at 13-14, so that's an encouraging sign to me. Now there's a little seasonality. Going back to Brad's question about that, the VIX tends to get low in front of holidays, and we're right in front of Thanksgiving and Christmas and New Year, so trading will slow down. But big picture, it's 13-14. That's encouraging. Option activity is encouraging. I definitely have a growing list of stocks that are on my radar. These stocks that Mike was talking about, they don't pull back. I just keep saying, Duolingo, let's say, I'm like, if this thing can just pull back $5-6, I'm getting in. It doesn't pull back. Stocks like that. Pinterest has not pulled in. So I'm encouraged. There's definitely buyers. The dips are super shallow, but who knows what lurks ahead of us.
Right. Mike?
What he said. I think, I'm optimistic. Like I said, I think you said, is there a difference yet? I think it's to me, it's too soon. It's 3 weeks.
Yeah.
But I would say that one difference is that we just had another 3 month or whatever, 4 months of grinding, down to grind many more people down to the nub and get people negative. So I think that's positive. And I think if the breadth gets better, again, it's not really my thing. I mean, give me a narrow rally with a bunch of tech like 2020, the pandemic stocks, hey, I'll take that every day. But I think if the breadth improves, it's going to do well. So I think if something doesn't, I think all the stuff we know about, assuming rates don't spike, I think all the stuff we know about in the world, the market's probably comfortable with. The question is, China sells all its treasuries or, something stupid and the dollar gets hit,
right.
Whatever. I made that up, but I just mean, I think, I'm optimistic that just the sentiment pendulum can kind of swing in the other direction as long as rates don't, spike, and the market can work its way higher here, possibly powerfully, but maybe it's choppier. But the thing I forgot to mention earlier, I was going to say is over what I've learned as a trend follower, because I'm sensitive to this, is the market tends to have periods where it's choppy and breakouts don't wear all this stuff. And then eventually it goes to more of a trending style,
Right.
We did have a downtrend in 2022, but it was very, it's been 2 or 3 years where things have just been very short term and they go up for 4 weeks and things die and all that stuff. So I'm pretty optimistic again that 2024 and beyond, we'll get back to some more trending activity where a stock or a group can go up for more than 4 or 5 weeks without Jacob and all his friends selling it and crushing it and killing our hopes for a sustained rally.
Well, even just looking at the last 2 weeks, looking specifically at the NASDAQ, it's been more of a stair step, right? Where you get a strong rally, lateral move, strong rally, lateral move. Recalling sort of back in the day, the market takes the stairs up and the elevator down, right? Is what I'd always heard. And it certainly feels more constructive where these strong rallies are met with more of an exhale than a reversal of trend. That's my take. I don't know if either of you have any kind of comments.
I totally, it feels so far it's early that sure. After 2 years of Fidelity and T. Rowe Price kind of nibbling and doing some stuff here and there, which maybe Jacob's seen and, the equivalent of in the big options trades. yeah, it feels like they're accumulating stuff, meaning like, if the stock starts to pull back a couple bucks, it's like, oh, I'll take 10,000 shares, sort of thing. So it's early, but that's my take on it so far.
Now, if you want to hear more from Mike, Mike will be on a webinar with me and several other Cabot analysts next Tuesday, November 21st at noon Eastern. It's called Mastering Today's Market. 4 experts, 4 top picks, and a wealth of wisdom. That's with Mike, Tyler London, who runs our Cabot Small Cap Confidential Advisory, Tom Hutchinson, who runs our Cabot Income Advisor and Cabot Dividend Investor newsletters, and Bruce Kaiser, our value investor, who runs Cabot Turnaround Letter and Cabot Value Investor. That's noon Eastern time. It's free. You could sign up on the cabotwealth.com website under the free webinars tab. Again, Mastering Today's Market, 4 experts, 4 top picks, and a wealth of wisdom. Okay, last question. I have to get to this because this meeting does double as the Bad NFL Teams Anonymous meeting. All 4 of us have 4 different teams, and they range from very disappointing to just flat out bad. I'm a Bills fan. Disappointing, very disappointing. Mike, Patriots, Jacob, Bears, and Brad. Is that team still in the NFL? They've been relegated. Arizona Cardinals. Okay. Who of us should feel worse, do you think, right now?
Jacob.
You're so wrong.
Chris.
So wrong.
I think it might
it's because
me.
the Bears are bad and trying. I don't feel bad at all about the Cardinals. They're tanking this season to try and get a high draft pick. I feel terrible about them in the long term. They're an atrocious football team without any track record of success. Back when they were still in the NFC East, there were more Cowboys fans than Cardinals fans, and they routinely trounced us. And our biggest win was knocking them out of the playoffs in a wild card round in like 2006. So the Cardinals are atrocious, but Jacob should feel the worst because his team is trying.
Okay, you are so wrong. And Mike and I fight about this once every 2 or 3 days. I am more bullish on the Bears than I have been in years because they stink. We have potentially the number 1 pick and the number 3 or 4 pick in the NFL draft. I want them to lose every single game. I love a good tank. I don't want to be in the middle. I'm so tired of being in the middle. Mike and the Patriots can be mediocre and try and just be, get the Mac Joneses of the world. I want us to lose every single game. I actually bought a hat and a Bears hat and a Bears shirt this week. I am so bullish on them being so bad that this is going to turn around. I tank away. Tank.
I think most disappointing has got to be my Bills, which you don't even really need to get into. Depressing, it might be your Pats, Mike. No offense. I don't know how you feel about that.
Oh yeah, it's bad. Before we got on here, for the people recording, it had like a rank of advanced analytics for the Patriots. It was like pass blocking, how open the receivers are getting, and how accurate the throws are, and they were all like almost either last or like second to last in the league. So yeah. I do watch them. I kind of like sort of hate watch every week a little bit, but I watch, I root for them. I'm not a tank guy. I don't think it's good for I don't think you can tank and then next year come in and be like, well, now that we drafted this guy, we're going to change the entire culture is all about winning. Like, no, I don't think that works. But at the same time, call it tanking, call it losing. They're pretty bad. And, the only 2 teams we've beaten this year is the Jets and there was another team. I forget who did we beat.
This is why I have the most disappointing team. You lose to the Patriots. I think you're automatically disappointed.
That was an awesome game. That made the season worth it right there. It was an awesome game.
Thankfully, I was out shopping that day with my kids and missed the whole thing. But well, hopefully this is just like the market, or negative sentiment has reached a peak or a valley, and hopefully it's nowhere to go but up from here.
Yeah, but nobody's buying the Pats. There's no money market fund on the sideline that's going to rush in and buy the Pats, and all of a sudden they're going to have a receiving core that's more than 1 rookie.
Yeah. Well, if they could just get a good coach in there. Okay, so let's go.
Shots fired.
Yeah, too soon, I'm sure. Thanks everyone for joining Street Check, and thanks Mike and Jacob for joining us today and humoring us on this deep dive on all things market and bad NFL teams. As always, subscribe, give us a like, 5-star review. And we will be back. We'll be back next Wednesday, actually, before Thanksgiving. We're not spending our time on here during Thanksgiving dinner. So we'll be back next Wednesday Thanks again for joining us, and we'll see you next time.